Good day, everyone. Well, we see a market that can't make up its mind, and it's interesting because these pullbacks get shallower and shallower. So, you know, is the market just going to start flatlining at some point and not give any kind of opportunity in either direction? That concerns market timing, of course, because the market timing has been very difficult, as you can see from these patterns that have been tracing out on the major indices. You know, just sloppy go nowhere patterns, and you know, we've got QE at the ready from many central banks. China has expressed renewed interest in increasing its allotment of QE due to their flagging economy, and of course we've got other major central banks having done the same. So, you know, this pushes the market higher, but very reluctantly. It seems the markets are tiring. U.S. market is still the tallest standing midget because its markets continue to hit new highs, whereas the European markets, UK, Russia, all these other markets are well off their peaks and have been in you know, a quagmire for about 7 months. You know, certainly since last year, middle of last year. So right now, we're just seeing the U.S. market try to figure out its direction, and fortunately, in the stock picking arena, there still remains actionable names. These names trace out, the best ones trace out patterns that where profits can be made on the long or the short side, and you know, this is very much a stock picker's market, and not much of a market timing one. But as we've always said, you know, the markets, they're not going to flatline. They're not going to keep going in a sideways motion, because the only thing that doesn't change is change. And so count on the markets finding direction at some point. And so right now, you know, MDM remains in cash. That's the best place to be when the markets are pretty much directionless. But it's not an easy environment, because then sometimes, you know, the leaders will start looking very good and the markets will start hitting or approaching new highs. And only to see those new highs make an about face and the markets head lower. But they don't head lower for long, because they do find that floor that's motivated by QE. So, you know, it's easy to get vertigo in these markets, because they just, you know, you don't know which way you're going to go. But fortunately, there is the stock picking aspect, and certainly with pocket pivots, there's been a number of actionable names, and in today's webinar, Gil's going to go through a number of actionable short names, since there are some setups. And you know, these kinds of go-nowhere markets, what's interesting is that there continue to be interesting setups on both the long and the short side, but you have to be very quick and nimble in this kind of environment. And as far as you know, the direction of oil and commodities, and you know, everything's slowing down. You know, the demand out of China is lower. Oil still seems like it's trying to put in a floor, but you know, it's really anyone's guess, you know, right now, because commodities as a whole also look like you know, they're still more or less in a downtrend. And as long as the world economies continue to slow down, I don't see respite for the price in commodities. You know, wouldn't be surprised to see lower oil, lower commodity baskets of commodities, you know, until China can really start, in India and U.S., all these, you know, Europe, until they can really get back on their feet. I think demand is going to be less and less as we move forward. And QE, meanwhile, will be greater and greater, but the markets seem to be very reluctant to respond to the QE phenomenon. And that said, you know, all this money printing, the money has to go somewhere. Capital has to find a home, and bonds, I guess, have been the place. Thus, you know, we're seeing ultra-low interest rates, historically low interest rates. But on the other hand, you know, the part of this capital goes into the markets because you get a better return that way on your money. You know, you're getting 0%, or in some cases negative percent, which is quite unprecedented, you know, for bonds. And meanwhile, the stock markets, the tall standing midget, which is the U.S. market, continues to attempt to hit new highs, although more and more reluctantly. And these world markets are nowhere near their highs. You know, you look at the what is it, EVI, which is not the EVI, the TWU, which is the UK market. that old high was set in June. But if you look at the UK market, that uptrend it had was completely anemic. The uptrend since mid 2012 to mid 2014, was pretty poor. So we're going to be focused on where going for the daylight, which is what we continue to see in certain specific leading stocks. They do offer some daylight in this market, and so profits are possible. And we're going to focus on that for now until the market gives us a clear sense of the direction it's headed. Gil?
Yeah, I think for the most part, you can see on the S&P 500 index here, this thing's going nowhere. I mean, you're nowhere since you're running below the peak here in early December and the peak here in late December, and you're basically going nowhere. Meanwhile, the NASDAQ is in this choppy range, and some might say it's an ascending triangle, I suppose. But every time it breaks out, the move is marginal, and we roll over. And the biggest move you get is always off the lows. So this is the biggest move, and if you caught this part of the move from here in mid-October to, say, early to mid-November, that was the fat part of the move. And what you see happening when that occurs in, say, mid-October, stocks coming around the lows of their bases. So we focus on buy points around the lows of the bases as stocks are coming up around the lows, rather than trying to buy breakouts, because breakouts don't see any progress. And I tend to think that only silly people buy breakouts these days. And you have to some extent, trade the trader and anticipate things rather than trying to move with strength and buy into strength. But the methods for doing this are very, very clear and very concrete, and I think that's what you wait around for. Right now, I think with the NASDAQ having gone to a new high, you start to see all these stocks that came up off the lows of their bases, like something, for example, like LCI, or which started turning around in January, and your buy points are in here, or something like CyberArk, which is actually, I think, acting okay as it's trying to set up in a new base. You wanted to buy it in here before earnings on this pocket pivot. This was the day of earnings here. I think if you had bought here, you're up 10%, which gives you some leeway holding into earnings. And I think that's probably the only stock I've ever told people to hang on to into earnings. And my only issue is I didn't load the boat as I should have probably going into earnings in the stock. But most of the problem there is marginability. Anyways, just real quick, I did want to say that I had a great time this weekend presenting at the HGS Investor Conference, and I know I saw a few of you subscribers as well as webinar members. So shout out to all of you. That was a great session at dinner time. Our table, or at least our half of one of the tables that we were taking up at dinner on Saturday, is traditional for the conference attendees to all go to dinner at the Red Onion restaurant, which is across the street from the place, the hall where it's conducted, this conference is conducted. And we pretty much tried to close down the place, but we had to leave eventually. But we were the last people there. That was a great conversation. Anyways, just wanted to say that I had a great time, and hopefully do it again next year. Anyways, let's see. Somebody's asking, is the U.S. Fed still printing? I don't know. Call them. So I would imagine that keeping rates at 0% is tantamount to printing, or at least maintaining excessive amounts of liquidity. But whether they're printing or not, I haven't dropped by their offices to see if the printing presses are running lately, so I really can't tell you if they're printing in real time. But the bottom line is the economy is doing just so wonderfully that they have to keep rates near zero. So, and Janet Yellen, or as I refer to her now, stealing a line from the old Rocky Horror Picture Show, damn it, Janet Yellen, doesn't really know what she's doing. I don't think she knows what she's doing, and we talked about this last week, and neither does anybody else there. They're just kind of, they're like Milli Vanilli lip-syncing the same old lines over and over again. Anyways, but again, what my whole point is, with this market, you got to be watching the bottoms and coming on. If you came in here in early February, there are some names moving at that point in time, and I think Cyber was one of them. So, you know, this is where you come off the bottom, boom, out to new highs, but that's where you get the best move. If you're in here when IBD says, you know, market in new uptrend, it's now safe to buy stocks, things get a little more difficult. And you see things like Facebook, you know, trying to break out again, and it's kind of wobbling and failing. I actually shorted that this morning and scalped it off the lows for a little bit of money. Did the same thing with Twitter, although looks like I should have maybe held on to it, which is now below 50. But, you know, to me, this is not where you buy these things on the breakouts, and you don't really go anywhere, and they'll shake you out or come back in, and you're not making any progress. And if we look at something, say, like LCI, here's the breakout point. It's making some progress, about 10% beyond the breakout point. But you'll notice the angle of ascent is faster or steeper here, and it sort of slows down. So it all gets back to this whole concept of being opportunistic, number one. Number two, not developing a very rigid view of where the market's going. I don't really care whether we're going in a bear market or not. What we can see is that the NASDAQ and the S&P got whacked pretty good off the peak here, and the volume is pretty good. And now you're just kind of tracking sideways. You tested the 50-day yesterday, so maybe it bounces. I don't know. I'm just watching what the stocks are doing, and that's really where you want to be. So let's see. Somebody says, but Kramer really likes her. Yeah, my guess is he's got something going on with her. He has a fetish for gnome-like women, I suppose. So, you know, I'm going to go through some names. Let's just whip through some names. GoPro. I look at this as, you can see in the weekly chart here along the lows, there's some tight closes down at the lows here. And you're pulling back just below the 20-day. But for all you know, this is just coming into a viable spot. If the market's weak and it turns, I think you need to watch this one, because everybody's convinced that they're done. We talked about this last week. And the pocket pivot that I saw was here, I think. Well, you could call this one a pocket pivot, but I use a 5-day on this one. And so you got it. Now you're back to that level. And it may be viable in there. I'm kind of watching it this morning. It's up 93 cents. But not sure if I want to commit anything going into tomorrow's jobs number. So they're going to do something. Have you ever seen that before, Dr. K, where they have the jobs number announced on a day when nobody's trading? Has that happened before on a Good Friday, maybe? Since it tends to be early in April.
Yeah, I do believe it can happen that way. And yeah, and then what happens is, you know, Monday then is the gap up or gap down on that basis.
Yeah. So place your bets, and I'm betting on 3 cherries or 3 bells, whatever you get on the slot machines that wins. Or is it 3 bars? I forget. I haven't played slots in a while. Somebody says Cuervo. Let's look at Cuervo. Pulling it at its 20-day moving average here. Come on, buddy. Okay. Yeah, this is a little volatile. I think the place where you had to buy it was the last webinar we had last Thursday when it was coming down to the 50-day moving average, which kissed the 10-day. Remember, you got to watch both the weekly and the daily chart. So you could have stepped in and bought a little bit of it, or bought a lot if you've got really big cojones, and you would have done okay on a quick trade over the next couple 3 days, because the thing rocketed higher. I mean, that's huge. Those are huge moves. But again, a breakout that runs up looks great. You sell into that move because you want to be in a position to buy on the pullback. That's really the way I operate. I don't sit around thinking I'm going to play something for the long-term gain. I look for the setup. So in this case, this thing was setting up on some voodoo action right here at the 10-day line here, and then boom, it gaps up, and you're off and running. So you got to look for the setup, buy. You try to buy in here or initially here before it breaks out, and ride the move, and you get what? What you get on, like 15% or yeah, about 15%, a little more than that from here, from the 10-day up to here, maybe close to 20. But in any case, you get a nice move like that in just a few days. You got to take it, and then you wait for the pullback. So this environment requires a very active approach. If you're not, say, if it's not in your DNA to take an active approach, then maybe you sit it out, and or you think you're going to buy something that's going to be a long-term hold, and I don't know if you can hold a big position in something, because you really don't know where we're going from here. This market could suddenly turn higher, or it could blow apart. You don't know. That the system is so unstable because of the fact that we've had 0% interest rates now for what, 5 years, more than 5 years, and if the whole thing tips, you don't know what sort of inflection point you're going to get. Is it going to be a mild reaction if the Fed raises rates, or is it going to be a very sharp reaction because they're signaling the beginning of the end of all this liquidity, and because of the distortion that's going on, that's going to cause some sort of a major breakdown. But you don't know, or maybe it's all benign. Who knows? So, that's what you're dealing with in terms of the environment overall, the general backdrop. SunPower, I don't really like this. Had a breakout, gap up move here, falls back in. Let's see, GoDaddy. Whoa. Oh, let's all buy that. You like GoDaddy, Dr. K? No.
Huh. Well, it's a great company, I mean, in terms of the fundamentals, so I am going to be tracking this one.
Yeah, 2 days. The other one I'm watching here is this Solar Edge, which just came public, and it's actually been trucking higher, but it's got to build a base eventually. That's what it looks like on a weekly chart. And so I'm just keeping an eye on it. It's kind of interesting technology. Cyber hanging out, pulling into the 10-day line. Wonder what the volume's looking like on that one. Let's take a look. Volume is running 50% above average as it's pulling in. So you'll see if that. I'm guessing you'll see that slow down. But I'd watch this as it comes in. It may start to slow down. First Solar trying to move higher in the flag. Nothing really going on there. Ambarella is a real wild ride if you like wild rides. So it breaks down, holds a 20-day, and moves to new highs, and now it's kind of skittering around. Vivint Solar is hanging out. You know what we're going to do? Let's do this. I think we're updated. We should be updated. Just go through some of these names on HCS Investor. You see PACOM is holding tight along the 50-day moving average. And that's maybe one to keep an eye on. Chegg, this one I've liked, back to the 10-week line or the 50-day moving average. I'm sure on the weekly chart it's the 10-week line. But, just kind of pulling in, maybe that's a logical point where they pull in and then they'll come out. I mean, a lot of stocks do that. They have a nice move and then they'll start to look ugly, and of course the ugly duckling rears its head and the thing turns around and goes. And whoops. So let's just fly through these. Second segment, I've been keeping an eye on this since this big move. It's coming in, volume keeps drying up. I think you're running a 69% below average right now, you can see over there. GoGo pulling in. Now this is something to keep an eye on. It's been acting pretty weak coming in ever since the chief accounting officer left the company. But, that news may just dissipate and the stock's able to come out of this. And volume is sort of drying up. Notice how yesterday you traded heavier volume, but you closed in the upper part of the range. So that might be okay. It's hard to say that. It's maybe just setting up. It gets an ugly duckling look to it, and it starts to turn off, say, off the 50-day, or maybe on the weekly chart. That's the 10-week line. So we're going to keep an eye on that. Shake Shack has nice moves up and now pulling into the 20-day. Notice volume is drying up. TASER, I've been tracking this one. Somebody emailed me wanting to know if it was a short, and I don't give individual investment advice via email, neither does Dr. K, so don't bother sending us emails asking us what you should do with the stock. But in this case, I don't know what this is doing. It's trying to set up along the 20-day, and again, it has that ugly duckling flavor to it, so this thing could turn around too. So that's why I've got on my buy watch list. I don't know if you want to consider it a short, because it did have the break off the peak, but it's trying to build up again, and it's not unusual in this market to see stocks do exactly that. So CommScope, I've been watching. This is they make towers, I think, cellular towers. Vasco just kind of limping along the lows. I keep track of a lot of stocks like this where they're moving along the lows of their bases. Salesforce had this big gap up. Now it's sort of triangulating and setting up along the 20-day moving average. So, I couldn't say that looks ugly or that it's a short, whatever. You did have the gap up. It was a little bit obvious probably, but it came and filled the gap, and now it's backing and filling. So just because something fails on a viable gap up move doesn't necessarily mean you just forget about it. It can come in and set up again. And here's one that might be one example. Tableau Software. Data has been hanging along the 90 level. Let's see what's it doing today. Up 54, 91.51. And it doesn't want to break down below this point, which is the breakout point in the base. If we do this, you can see there's a big cup with handle. So this is the breakout point in the cup, from a cup with handle. So that this is the top of the handle here, and it's holding that. So it's sitting there, and it doesn't really want to go anywhere. And you're not seeing any heavy selling coming in. So it does set up the possibility, particularly with the stock underneath the 50-day and on top of this handle, where you could see a pocket pivot buy point materialize, and I think that's probably something you want to keep an eye out for, especially when you think they look ugly. I've been shorting this thing every time it hits the 10-day, 20-day confluence here. Boom, boom. You get some downside, a couple bucks downside, but I'm just scalping it over and over again. And it's not really breaking down, and I can tell you, I can feel when it gets down into that 90 area, 91. You don't get a sense that anybody's really selling it. It'll come down, and then that'll be it. You know, it doesn't come down anymore, and nobody's lining up to sell the thing. So I'm wondering if it's just kind of setting up. Maybe it pops out. So I would keep an eye on this. Grubhub looked beautiful the other day. It looked like it was going to go to new highs, and it reversed on heavy volume. Now it's into the 20-day. I think this thing needs some time to base, so won't really mess around with it. Visa is tried to break out. Now it's failed. It's violated the 50-day. But I don't know one way or another what that necessarily means. Is it going to rally back up to the 50-day? If the market rolls over, maybe you short it and it goes lower. So that's a possibility there. Spirit Aerosystems, here's a stock that's hanging in there very nice. So you had a little pocket pivot yesterday right there. First Solar, again, holding in there okay. And showing some nice kahuna, upside kahunas here. You know, not and acting okay, and actually up on days when the market was down, like yesterday, and up again today. So this is probably my favorite solar. It's probably the one to go with if you want to play the solars. Amazon maybe becoming a short. You notice how you've got these tails in here over the last few weeks, couple of weeks here along the 10-day, 20-day, and it's hovering around the 10-week, 50-day moving average. I'm wondering, I think if the market breaks down, you may see this breakdown. I don't think I'd buy this thing, but I am watching. Here's Fibrogen. This is a little tiny 128,000 trader biotech and highly speculative, but it looks like it wants to go higher. BCA Antic. You notice this one's just hovering along the 10-day. Walt Disney's hovering along the 20-day. This X-ray, Dentsply, looks like it's trying to form a base. I've been watching it, but no real progress. But still, you know, this Avalon holding is kind of interesting. This is I don't know what this is, but it might be a REIT. I forget. But in any case, it broke out of here, and look at that reversal on the breakout, but it still goes higher. So now it's hanging along. So that's another one hanging in there. LinkedIn has violated the 50-day, which means maybe it's going to turn around and do the boomerang sort of maneuver that you see very often in this sort of market. And so everything's starting to go code red, though, so it looks pretty grim. And I'd almost think that if you had a rally up to the 50-day, you might consider shorting it if the market's weak. You can see the Dow's up 70 now. This is a type of day, you're going into a long weekend. Everybody places their bets before, like I said, before the earnings number, or I'm sorry, the jobs number tomorrow. And then the market's just going to, the algos are going to bat it back and forth. So if you buy anything on strength, they're going to take it from you and then bat it the other way. And if you sell it on weakness, they're going to take it from you and then bat it the other way. And that's probably what goes on for the rest of the day. So, you know, I'm contemplating hitting the golf course or the beach or something after we finish this webinar. Catalan hanging in there along the 10-day. This one, Agios, violated the 50-day a while ago, and it's going nowhere. The biotechs have looked pretty grim recently. I'll get to that, though. SunPower, you've seen that. I don't like that. Verint Systems, a big, huge reversal, sort of pocket pivot jack to the upside here a few days ago, last week, I guess, and hanging along the 10-day on the pullback and basically holding this breakout. Interesting, I think. Cavium pulling in after bouncing off the 50-day line. Volume's very light, but that's kind of neither here nor there. O'Reilly Automotive had a big gap up here, Bible gap up, but has really gone nowhere, so it's kind of blah. Barracuda's probably points out some of the strength in the cybersecurity area, which I still like as a group, but I'd be watching how some of these names act. Here's trying it on a gap down and trying to hold the 50-day. I don't know if I like it. Even Solar trying to hold along the 20-day. Volume's drying up. Maybe this thing holds the 20-day. If the market turns, maybe it turns. So I keep an eye on this one. Whoops, I keep hitting those binoculars there. El Pollo Loco had this Bible gap up sort of move, but it's a bottom fishing move. And the thing's just kind of drifting in and not getting any thrust off of the 50-day line. But just keep an eye on this. Maybe it turns and sets up again. GW Pharmaceuticals. Now this had a big pocket pivot sort of move here on a gap up. Actually, I think there was some news, and it's pulled in, and now you notice how it's holding along the 10-day and the 20-day here with volume drawing up. So this may turn and go, but it's become a real thin trader, about 300,000 a day. So not really one of my favored names here in terms of liquidity. But I think if you can buy 1,000 shares, maybe two, that might be okay. But you notice that's sort of tucking in, and you get the volume drawing up. FireEye, had the nice move after the gap up here, but it's a bottom fishing move. But they're not, in terms of making money, they're not one of the leading cybersecurity firms. So I'm not sure I really am into them. I think I like cyber better. So let's pulling back right now to 54. I'd let it see what it does here. I wouldn't be surprised if it turns out of here, but we'll see. Luxoft Holdings. This is another smaller name, trades 269,000, but decent earnings, and they're in an interesting area, pulling into the 20-day, and usually this is better to bought on weakness. You can see last time you could have bought it coming around here. You get some support yesterday off the lows. Michael's Companies is coming, that had a sort of a shallow move higher here, and now it's underneath the 50-day, so that's kind of blah. Avago bounced off the 50-day. There's your trade right there, but now it comes in, and I don't know what it's doing. Apple sitting at the 50-day moving average. Probably should keep an eye on Apple. If it breaks with any sort of conviction, then you might have a problem there. So. Just checking out some things in the market right now. Let's see. Canadian Solar is another one. It's a little bit choppy. I still like First Solar if I have to pick a solar name. Zeltique is not really acting so well. It looked very promising initially, but now it's just kind of blah. Biomed is hanging in there, and it's holding along the 10-day after the Bible gap. But it needs to get going. Would you take a position in something like this, Dr. K?
I've looked at Swan. I am tracking it because it's done very, very well. It did a gap up on its earnings and so forth. But no, I'm not going to be looking to take a position in it now, like today.
Yeah.
I want to see where it goes from here. But obviously it's doing very well, so it's got a lot of price momentum on its side.
Why not on the basis of the of the Bible gap up?
If you're sitting on a position in this, don't sell it out. Wait to see what happens. But you've got the price momentum on your side. I just wouldn't be buying it, on a day like this particular day. It's in the middle of a sideways formation.
Okay.
And which way does it resolve? Well, I think that's going to be market dependent to some extent. But if it offers another pickpocket pivot, that would be an actionable point.
But what about, okay, but let me ask you this. This thing had a Bible gap up 7 days ago, right, or 8 days ago. So on the basis of that Bible gap up, is it still viable on the basis of the Bible gap up? Is it within range?
Well, it's a great question because let's say on a Bible gap up it retraces toward the low of that Bible gap up, and it does so within a few days. Generally I'd like to see it within 6 days. Yeah, you can take a position in that because your risk is very low because you know your exit point.
Okay.
In fact, after day 6, you don't give it any porosity, and if it breaks below that low of the gap up,
right,
you're out. So right now you can easily calculate what your risk is here because it's been trading for more than 6 days since the gap up. What's it at right now? 70.6, and the low is 66.6. So you sell it at 66.5, and your risk on this position is going to be what's that? 8%?
Yeah,
something like that, 9%. It's up to each individual trader, but I also don't like how it is just it's moving sideways. It's not really off to the races here. So it could end up doing what it did. It's been known to go sideways for an appreciable amount of time. You could just have dead money in this thing
right.
for a number of weeks.
Right. Okay.
So all that considered, I'm not interested in the stock today. If it goes toward the low of its gap up on a weak market, if the market's not so weak that you just want to be selling everything, you might want to take a position. I mean, if your risk gets down to like say 3%, then you might want to take a position forgiving the stock because it's weak due to a weak environment. Of course, if it goes toward the low of its gap up day in a strong market, I'm not interested because it should actually be keeping up with the market. So these are all the questions that have to go through a trader's mind when they're looking to initiate a position in this kind of situation.
Okay, my perspective is you have a viable gap up here. If you're drawing up on the volume along the 10-day, you probably can buy it along the 10-day, and then I guess the stop would be the low of the viable gap up day. So for those asking, Horton, here's a who. Horton Works. We talked about this one last week as it was pulling into the 50-day, 20-day. It's actually making a higher high here and trying to come up around. But this is a thin 342,000 name. This is, again, this Hadoop platform, which is a big data platform, I guess, in the cloud or whatever. And it's an open source sort of thing. And these guys are making products based on that. And so it's trying to round out. It's a cheesy little IPO. It trades pretty thin. I'd like to see it grow up, but it's acting okay. And again, it starts to look a little ugly in here along the 20-day and the 50-day. It doesn't violate it, but that's where you want to buy it. Now it's up in the midst of a market environment that is tenuous, probably at best. Zio.
It's a bit speculative as names go. It's
it's very speculative. Yeah.
Sales are really scant to nothing, and also it hasn't even from this new issue price. We like to see its stock at least have doubled, and hot stocks generally will double the first day, or at least if they don't double, maybe they'll eventually within the next few weeks have some kind of doubling. So this hasn't done that yet, and the pattern looks a bit sloppy and tenuous.
I would interject, Dr. K. That's not my rule. I think a lot of stocks, after they come public, can be bought below the IPO price if they're setting up in a base. Bob is a great example, I think, of that, or where it didn't come close to doubling.
What's the ticker on that?
So I don't operate with that rule.
Ticker on that?
Pardon me?
What's the ticker on that?
Baba? Baba.
I can't hear you. You're saying, oh, Baba.
Baba, yeah. You look at Baba.
I'll
It came public, and then it didn't go anywhere, and it had a nice move.
I would say that rule generally applies to stocks that are not mega cap. I mean, if you get mid caps, small caps, even some on borderline large caps, stocks that are generally like under 5 billion, right. I find that rule works really well. But okay, Baba is that's a super cap. That's a $200 billion company, and with super caps, you have different rules that apply because they don't tend to move. They tend to behave differently than non-super cap stocks. So this one was IPO'd at 68 and it went all the way to 120. But actually, before it went to 120, it was an actionable name because the formation.
Yeah, we put it on as a pocket pivot right here, down here at.
Yeah, exactly.
But also,
it was a different animal altogether. I mean, Google as well. I mean, when these super cap names come public, that doubling rule does not apply. So yeah, thanks for pointing that out.
Yeah, but CyberArk is another one. It wasn't necessarily a super cap name, and it hadn't doubled from its IPO, and it works. I'm just saying that I don't. In this environment, I don't think you can apply rote rules like that. Like, oh, this has to double before I'll buy it. I think a lot of time, because of the nature of this market, I think you have to buy these things when they're setting up in bases, and they don't really look that good. Like Baba was a good example, and this one, CyberArk.
I'd like to see more examples. I haven't seen examples of
DSLR, is another one that
because,
might.
Cyber went to 36 in 2 days. I mean, it more than doubled. It doubled the second day of its IPO, more than doubled. And I keep seeing examples of this. Or, if the stock doesn't double, at least it forms out, and then that doubling hits really fast. And if a stock doesn't double, it tends to trace out a pattern that's not that desirable, and then it has a slower way about it. But I mean, of course, these are ongoing observations that get tallied, and so thus these rules are subject to change with enough evidence.
Yeah, I'm just saying I don't pay attention to that rule. It's not my rule. It's your rule, not my rule. Yeah. So just so people know, I don't.
And there are if the stock has an amazing story behind it, then that also has to be factored in. Because it's a great story, psychology that pushes that stock higher. So it doesn't have to necessarily have doubled. It just could be not doubled because it doesn't have earnings or sales, but a great story, and then it still is actionable. So yeah, I do want to stress that this rule is not like all rules. It's not a one-stop rule of where it has to be obeyed every single time. I'm just saying it as a generalization. It tends to work very very nicely over the years.
Okay, very good. Okay, moving through the old list here. Let's see, Canadian Solar, we looked at that. TASER Technologies, break off the peak. Some of these semis after SanDisk news last week, where the whole group got cratered, have come back, but their action is tenuous. So I'm not sure. Zio Group, this is a company that is into bandwidth. So they provide services that expand bandwidth, which they did a big offering right here, and it's kind of hanging out. It probably needs to digest it, but it's on my watch list. It may be something to look at some point. Kind of not terribly thin, 603 million shares. I'm sorry, 603,000 shares a day. Not huge, but getting bigger. GoPro, we looked at that one. Electronic Arts hanging in there. Hortonworks, we looked at that one. Palo Alto Networks looks good and then pulls in. I'm not sure what to make of this. Maybe they don't go anywhere until earnings come out again. Zetas, this is this drug stock. It's just hanging in real tight. ARM Holding, now this is one that might be a short, and you have the break off the peak. Now you're in a bear flag, and I've been waiting to see if you get a rally up into the 50-day moving average, but no such luck so far. So not really set up yet, but it looks like it's ready to break lower. And I almost would look at it as a short here, depending on what the market does. VIP Shop going higher. Southwest Airlines. You notice all the airlines are starting to break down. They were hot names, so Twitter, Home Depot. Twitter is, I think it's, I'm guessing it's going to fail. We'll see. But that's my guess right now. Home Depot, moving along. Lanet, hanging in there along the 20-day. Skyworks holding along the 20-day. This is one that bounced off of the 50-day, 10-week line. Umbrella, same thing. MasterCard, potentially a short like Visa. Tried to break out. Now it's breaking down. Now you're back up into the 20-day. So it's almost looking quasi-shortable in this position. I'll get to the short list in just a second. Juno, it's like very choppy, but the place to buy it was down in here along the 10-day when we first talked about it. Cuervo pulling down to the 20-day. Volume is light, so I don't know if you want to stick your neck out here. I think I'd wait till Monday on taking most positions here. If you don't, unless you're already long some things. This Mimetics or whatever it is, Mimetics I think it is pulling in. Kind of a thin name. We're not really too sure about it. Medivation pulling in along the 20-day. Netflix breaking. Now this is a short to me, so we talked about this before. You had the fractal head and shoulders. You get the rally to 20-day. / 50-day confluence here. That was a short point. Now you're in a bear flag. You're living under the 200-day moving average. To me, it looks like it wants to go lower, and I would guess it would fill the gap down to, what is this level here? Down to 350. So that's a possibility, especially if the market rolls over. So remember, a lot of these names we're looking at one way or another. Longs if the market turns, shorts if the market breaks down, and maybe going both ways if the market remains choppy on a case-by-case basis. Because the bottom line is you could have shorted Netflix a couple of weeks ago or so, and you'd be doing great. Starbucks trying to come off the 50-day. First pullback to the 50-day since this gap-up move. Maybe it's viable along there. You know, that's a possibility. Kind of keeping an eye on it that way. White Wave Foods, they make almond milk or something. Soy milk, I don't know. But they've actually done pretty well since this gap up. Interesting, a food company. Just a cheap biotech. Celgene is a short. I thought this was a short last week. For those of you who were at the HCS Investor Conference, and I talked about this, and I talked about the general breakdown in biotechs and how that could be telling you that there's opportunity on the short side, and that was on the weekend, on Saturday. And over the last 3 days, Monday, Tuesday, Wednesday, and we could actually short it Monday, and thing is headed lower and undercut this low here. So that sets up the little reaction rally. But I think it could be headed for this low and undercut that low, which would then coincide with the 200-day moving average. But as an example of a biotech that was a hot name, and of course, buy the breakout, you fool. And you buy the breakout and slam, you get slammed right away. Facebook hanging in there. Biomarin, this another biotech was acting well. You had the fake out, you have the breakdown and then the fake out gap up. I've seen this one before, especially in biotechs. You have a breakdown and then they gap it up. There's probably some news and then the thing breaks down again. It just ends up being a big short. Cyber hanging in there along the 54 level. That's what I was looking at earlier. You notice it dropped below 54, and that looked to me like the spot to move in on an intraday basis. It's turning now. So why don't you all jump in and push it up for me, okay? Intrexon was a great name off of this level here. This is where you had your best move, and now it's chopping around, but still trying to build a base. Expedia had a pocket pivot somewhere in here, I forget, but that's trying to break out today. So what do? You short it if it's breaking out, right? Infinera, pocket pivot here. We talked about this last week, but it hasn't gone anywhere. Like most things. There's Sedge, Solar Edge. Cambrex, this is acting pretty evenly, continues higher. JetBlue holding the prior breakout, but it's weakening along with the other airlines. Arista Networks had some pocket pivots in here. It's sort of building along here, but I don't know. This is not really going anywhere. And that's pretty much that. Now let's look at some shorts. 3D Systems, I have it on my list. Alexion, this thing's a short on rallies, and look at how it's trying to break out off the lows here, and that failed. And now this is looking grim. Come on, you guys. We can get Cyber back to unch, or you guys can all do that for me. So I got a little bit here, so we'll see what happens. Amgen is another one trying to break out, and it fails. You know, this might be shortable here using the 50-day as your stop. Baidu, I think, is a short in here. 50-day is your stop. Flopping around on the rally. Market rolls, it's rolling. So Biogen is on my short sale watch list now because it's failed on this Bible gap up sort of ascending base sort of breakout attempt and sitting at the 50-day moving average. And it looks kind of poopy here, doesn't it? To me, I'm just kind of watching this right now. For me, it's sort of a barometer for the group. But notice how, you know, it has this great gap up, and everybody got to buy it, and it looks so great, and that's it. I think some of this is cautionary in the sense that it may be telling you something about this market. Whether that all develops right away is another thing to be seen. But the other issue, of course, is all the liquidity and all this, the idea that everything may just continue to slosh around. And so you're in this sort of day trading, swing trading type environment. We looked at Celgene, Century, Aluminum. This is one we talked about a long time. See what this has done? Remember we were talking about it in here as a short, and it just continued to die along with oil dying. Chipotle Mexican Grill was shortable on the rally. Now it's underneath the 200-day, so maybe rallies into the 200-day become shortable. But it's starting to break down. You see the fractal head and shoulders coming on a late-stage failed base. Cree, I think, is going lower. This thing looks like it wants to roll. It's sort of a down and dirty pattern. If I shrink it here, you can see it's been down for a little bit, but it almost looks to me like it wants to head for these lows. F5 Networks looks like a short here. You see the fractal head and shoulders here, but this is also a bigger head and shoulders after this gap down. So this looks shortable here using the 50-day as your stop. Facebook is on my short sale watch list because it's starting to fail on the breakout. We'll see if that plays out, but that's why it's there. GameStop probably heading lower. This stock was a short last year for me and it worked pretty well on this breakdown. or actually, was that last year? No, it was the year before, in 2013. Now it's been going chopping sideways for a long time. Maybe it's headed lower. My son, who's into video games, tells me that they suck, and you can buy anything that they have, you can buy online cheaper. So that's his take. I'll go with them on that one. Gap, I'm just watching. Retailers, I think, should be watched because you're seeing some of them start to wobble a little bit here. Gilead Sciences is another one that's breaking down. Remember we talked about this last week, and you're sort of in this rolling head and shoulders formation. Now it's busted and actually violated the 200-day moving average. I think any rally up into the 200-day is shortable. So Google is starting to break down, and I think this is interesting because sort of a big rolling top sort of formation, head and shoulders like, but not necessarily, textbook. But now breaking below the 50-day moving average, and I guess that's a violation. This looks like it wants to go lower, and I think that's maybe telling as well for the market. So I'm going to keep going here. I see some questions. We'll get to that in just a second before we wrap up. Greenbrier, that's the index. Iron Mountain. Remember I was talking about this one a couple of weeks ago, and it rallied right into the 50-day and then bonked down to the 200-day. CURV was a good short, and we talked about that along the 50-day here. It's continued lower. Las Vegas Sands, down and dirty. I don't know if these rallies become shortable. LinkedIn is now on my short sale watch list because of the 50-day failure, and maybe that hits lower. Michael Kors still on my short list. It seems to be a short every time it rallies up to the 50-day recently, and the most recent rally into the 50-day was shortable. But you can see a lot of these are already down from the short sale points. So if you're coming in now, in some cases you're late, so you got to be watching for things rallying up into potential resistance. Kihu, Qualcomm's another one I think maybe is a short, and it looks like you had two big gaps in the pattern. You can see the rally here, you get another rally into the 50-day. Looks like it wants to roll over here, so, and it is. I'm watching this one because of the gap down, Royal Caribbean Cruise Lines. Seagate, that's a dog. Splunk, bouncing off the 200-day, I think rallies into the 50-day are shortable. You can see it was last week or earlier in the week, and its stock broke down to the 200-day. Make it look a little bigger. Tableau Software, remember, I'm on the fence on this one. I'm not sure what it is, and maybe a short, but it hasn't really broken down yet. Although it's starting to flip out underneath the 50-day, but it hasn't violated the 50-day. Take-Two is pretty doggy. I'm watching for this thing to break the 200-day moving average. Tesla, of course, Elon Musk, the amazing tweeting CEO. I really think, I read something about Stuart Barney says he's become a modern-day P.T. Barnum. And to some extent that's true, and it's kind of sad. But if you have to tweet all the time and be nondescript, if you've got some hot product you're going to announce, and just come out and announce it instead of tweeting about it in sort of non-transparent fashion, that it causes upswings in the market, but I think all of them just become shortable. So right now the stock rallies into the 20-day moving average. That's probably a short sale point. Maybe later on in the month when they come out with this amazing new product, which I'm going to guess is probably hype more than anything. I think if there was some amazing new product, somebody would know, and you'd see it more reflected in the stock price. But definitely rallies into the 50-day I would look at as shortable. And now you got a little cheesy little rally into the 20-day. Maybe that's shortable. Trinity, not really going. TripAdvisor, this one looks like it's ready to blow through the 50-day. So I've been watching, but I'd rather short it on rallies. Twitter is on my short watch list just in case it fails. And I've been hitting it the last couple of days when it rallies up near 51 and just scalping it, but not really much anything there. VMware, I think it's a short, using the 50-day as your stop. If you look at this, it's a big, you got the big head and shoulders here. I think you got this fractal head and shoulders it's forming now, as you can see here, and you get the volume pickup on the right side of the head. This looks like it's going to go lower, so I've been playing this on the short side too recently. Workday is rallying back above the 50-day. I don't think that's here or there. I think it may take some time. Remember, this is a pretty sharp break off the peak. And you do get some support along the lows here, so it could rally back and forth before breaking down. Yelp, just watching that one. YY, it's another one that's ugly. Zimmer, I notice, is starting to fail on the breakouts. I've been watching this. Maybe it's shortable here at the 50-day using that as your quick stop. And that's pretty much it. So let's go through some questions here. And I'll use this. We get 3 gnomes on the jobs number. That would be Yellen though. In any case, do we have any questions on stocks? It looks like I covered everything. We went into Avago. Doesn't that look like a fractal head and shoulders? Maybe this thing's heading for the 50-day. So short it. Use the 20-day moving average at 126.69 as your stop. How's that? QLYS, we got 8 minutes to answer questions. I already went through just about everything I wanted to. It's just hanging in a base, so, what am I supposed to tell you? It's wedging up towards the highs. If you have a profit, do you want to take it? Will it go higher? I don't know. Any other questions? I think everybody's half asleep. We're going into a long weekend. Got any big plans for the weekend, Dr. K, or they don't celebrate? Do they celebrate Good Friday in London?
Oh no, I'm back in South Africa enjoying the summer. It's cold. It's miserably cold in London. London sometimes just takes its time, and so I'm loving it in South Africa.
All right, cool. Anyways, tomorrow my wife and I have our 21st wedding anniversary, so hopefully we'll be doing something fun tomorrow. We're not sure what. We'll figure it out. Acorn looks like poop to me. I don't know. Maybe shorter here. Fractal head and shoulders ready to blow. Somebody says, I pre-ordered your book. Any timeline for publication? Yeah, it says if you go to Amazon.com, it says April 27th. So you'd be surprised if you read a little bit and actually read the website you're going to and pay attention to what you read. You may actually find some things out if you pay attention. So just so you know. Anyways, anything else? So, I think everything's getting kind of blah here. Time to head out for the golf course or something, the beach, I don't know. You got anything else to add, Dr. K? I don't really have anything.
No, let's hope the market resolves in one way or another, but it will, so it'll be interesting to see how this plays out.
Yeah.
QE pushing higher, but market expresses a lot of reluctance.
Yeah, I like that advice. Somebody says, beach or golf, tough decision. If I had the choice, taking a quick 9 and then the beach with a small cooler. Hope you have some water for the golf course this year. Oh, we've got water. California has droughts all the time. If you go back in history, there actually was one that lasted a century. Wasn't due to global warming, but we do get droughts from time to time. And I think that the left-wing government in California has done a very poor job of managing water resources and letting a lot of it, get lost because we haven't built any reservoirs for so long. And I think if you start to have shortages of water, I think you should do the same thing as we did with gas, which is let the price go up. And there's a lot of water out there. I mean, I think you could build a big pipeline from Oregon, Washington. You get a lot of rain up there, and and just have them pipe it down here. I'd pay more for water if it became a scarce good. But they might, the golf courses, they can do what they do out in the desert, which is it's all desert around. There's like small areas of green that you have to hit on. In fact, I think Trump National up in Palos Verdes, I played there, and that's kind of how they have that course set up. The greens and the fairways are just these little islands of grass, and then it's all just like deserty dirt and rock and plants and stuff like that. So anyways, market's coming in. It's going to be real slow, so I think that's it for now. No other questions, and thanks for showing up, you guys. Have a great weekend, and we'll see what happens on Monday. Take care.
So long, everyone.